Let's get this conversation brought in for you. Olabode, head of research at Vetiva Capital Management, one of the investment banks and securities trading firm licensed by the SEC and the Nigerian Stock Exchange, here to put some flesh on that 85-page report out just yesterday about the state of the economy and the markets in second half of 2018. You need to think now very deeply about the second half of the year. We're back to this time in 2014, just before the 2015 elections. So you need to listen very quickly if you have investments. If you don't have and you're thinking, you need to listen. Oladeko, good morning.
Good morning.
Thank you. This is an interesting report. But again, why did you guys title it In the Shadow of the 2019 polls?
I think one of the things that we believe about the Nigerian market is that the Nigerian market is significantly undervalued. We actually saw a strong rally in 2017, and we saw that rally continue at the beginning of 2018. But what we've seen in the last few months is that the sentiment in the market has been relatively bearish, and that has largely been on the back of the fact that a lot of people are looking towards the 2019 election. So we believe that the outlook for the market for the rest of the year will be significantly dependent on, how the anticipation around the coming elections, and that's why we titled it In the Shadows of the Poll.
Look at the markets and the economic fundamentals for us, and I'm sure you heard Michael spoke earlier, and of course you guys work together to put this together. So on the back of the economic fundamentals that we're going to grapple with in 2018, all into the first half of 2019. Where do you place the market within that context?
I think we have always believed that, again, the entire Nigerian market is undervalued. When you look at where the market is trading, and you compare it to Ghana, South Africa, Kenya, and other frontier and emerging market, you see that Nigerian market is about 20–30% undervalued compared to their peers. So in that light, you believe that, there's value in the Nigerian market. But we have always believed that the economic fundamentals will continue to drive market sentiment, and that's something that we have seen in the first half of the year. Yes, the market is undervalued, but will people come into the market to buy now? It's also important to state that a good part of our market is controlled by foreign investors, and we know how the foreign investors actually do analyze the market. They do a top-down approach where they first look at the economy and the country as a whole before going into sector-specific, then stock-specific. If you look at the economy looks as if it's brighter than we were last year or 2 years ago on a lot of fronts, because when you look at oil prices are stronger, volumes from the Niger Delta region is more stable, FX is stable, things are improving generally, so it's actually positive. But compared to where we were at the beginning of the year, our expectation for the economy is slightly lower. We had expected that we're going to see a rate cut sometime this year. That's no longer is something we consider no longer visible. Another thing we would actually look at is that there have been slight shocks in terms of production in the Niger Delta region from leakages and things like that, which has taken about 200,000 off our production. So these things actually affect our expectation for the full year.
Let's go sectors and what you put up on page 27 of your report, and as far as the fixed income. So let's look at the debt market. It said election jitters to hit fixed income market, quote and unquote. That's how you guys put it. So what do you think, why do you think the election jitters will be a major issue for holders of Naira debt papers?
I think one thing you'd agree with me is that coming into this year, we expected that yields were going to moderate significantly, and we had seen that happen. So when you look at the way yields were at the beginning of the year, Treasury bills, for example, was doing between 18 and 20%. That's a one-year Treasury bill. Now we are currently around 13–14%. That's about 400–500 basis point moderation, which is great. But from where we are today, we do not think that we're going to continue to see that moderation. Why? Expectation even from the CBN is that as we move to the second half of the year, we are actually going to see inflation tick up. Yes, we've seen moderation in inflation from like this time last year to where we are today. But in the second half of the year, on the back of the fact that in 2017, we actually had high base in the earlier part of the year. Inflation moderated in the second half of the year, so we are not going to see that support from high base of 2017 in the second half of the year. That's one. Another thing is that we are going to see election spending improve. in the second half of the year. They passed the budget. There'll be a lot of discretionary spending here and there.
Liquidity.
And what that does is that it boosts the liquidity in the market, and it puts pressure on inflation, as you know, the politicians or the political parties start to print T-shirts, umbrellas, brooms, and all those kind of things.
Banners,
actually, exactly,
things like that.
Spoil liquidity in the system, which is actually going to make inflation tick up a bit. Again, we expect that fixed income yields are going to react to this.
Once that happens, once those things happen, then what you wrote here comes next. And this is my view. The central bank will not be able to cut interest rates for the rest anytime in 2018 anymore.
Yes,
I saw that as a foregone conclusion.
Yeah,
we lost that window.
I think one of the good things that I saw from the last MPC meeting was the fact that, apart from the fact that the rate decisions and the other policy tool decisions were made, we saw more of a forward guidance from the CBN governor, and the guidance he gave was that inflation is going to tick up in the second half of the year. He said he will keep monitoring that space, and if we do see that, we believe that the opportunity to cut rate actually happened maybe in May and April when we had the MPC meeting. But from July, I don't think that there will be chances of cutting rates.
So let's just close that window. But if you put the global scenarios together in terms of the trade war, the whatever it is, then the U.S. rate hike and what have you, what do you think the position of the FPIs will be, the foreign portfolio investors, looking at the Nigerian market and the uncertainties around us? Do you think there will be that appetite? It's all over this morning. The finance minister says, or the debt management office says, we're going to do close to $3 billion in global DCM for 2018 budget, which and how soon do you think we're likely going to hit that market again? Before the end of the year? Is that likely we can hit the market, or in the first quarter?
I think we're going to hit the market before the end of the year.
With the first tranche?
Yes. I think in the next 3-4 months, we're likely going to hit the market with
September?
That. I think we're going to be successful with that. We've seen previous trends and the level of success that we recorded in those. Increase in global rate is actually a concern. We've seen 2 rate hikes this year, and our expectations are we're going to see 2 more before the end of the year, which means that there's likely going to be a flight to safety. A lot of investors are more comfortable with developed and stable markets. And even if you want to play in frontier and emerging market, there are a lot of frontier and emerging markets that do not have elections close by. Election worry is not just a worry in Nigeria alone; it's a global issue. People are concerned when there's election. The market always wants continuity, and once we don't get that sense of continuity, there's always fears of what policy changes and there's a price to be paid.
Exactly. If you enter the market at that point, there's a price to be paid. Let's change gear a little bit and go into the equities market. I'm looking at valuations, and you folks talk about why valuations is important and how folks will say, look, I'm looking at certain sectors to put certain bets, not bets as in, I don't want to say sports betting, but not that kind of betting. But you bet based on facts and figures, doing your research, putting your analysis together.
Yes, I think, I mentioned earlier on that the Nigerian equity market is significantly undervalued, and I always continue to stand with this. The banking sector is a sector I like so much. I think the banks have been overflogged.
Who doesn't like banks?
A lot of people.
A bank is where everybody wants to dip his hand and take some money.
Yeah, what you see about the banks is that
hold their shares.
The correlation within the banking sector and the economy is quite strong. So when you see the economy going downward, you actually see that the banks can suffer more. But I actually believe that the banks are significantly undervalued. I look at a lot of tier 2 names trading at about 0.1, 0.2 times book value. Even the big the banks in the sector, Zenith Bank is trading at 1 time book value. I think these are relatively cheap valuation stands. I also look at the oil and gas sector. Oil prices are stronger, volumes are more stable. I think the likes of Seplat would all continue to to come to mind when you consider that sector. Then you look at the industrial good. Dangote Cement remains the big boy in the sector. Recently, the stock has been beaten down to 220, between 220 and 230. I think that these levels are quite attractive levels. The consumer goods sector is also a very attractive space that you want to consider. There are a lot of good names there, flour mills, and a couple of other names actually come to mind. I believe that the market is undervalued, and what you continue to see is that as the election approaches, a lot of people will stay off the market. But watch. Before the conclusion of the election, you see some foreign investors position themselves, because once the election is over, then you begin to see the rise. So I think that a lot of people should watch out for this.
In other words, don't think, or I shouldn't think, the folks on the street shouldn't think that foreign investors have run away. They're just somewhere at the back here.
Yeah,
they're hiding around, watching through the curtains, and see how things move. But if you look at how do you think the player will be for the half-year, full-year earnings? Do you think this will bring some catalyst to some of the sectors that you've talked about, consumers, industrial goods, maybe even energy stocks?
Unfortunately, I think that earnings are going to be strong, but we wouldn't see them affect the market as much as we would have loved to. And you look at the last few years also, 2016, for example, apart from the tier two banks, you see that most tier 1 banks actually recorded record high profits, but we didn't see that impact them.